numbers for you, but talking about earnings and staying with earnings, we have Carborundum, which came out with its Q2 numbers. If you look at the PAT, it has narrowed on a year-on-year basis, but the revenue has seen a jump. However, the EBITDA margins have come in lower on a year-on-year basis, coming in at around 14.5% versus 17.8%. But if you compare it on a quarter-on-quarter basis, definitely the EBITDA margins are looking much better, 14.5% versus 11.2% on a quarter-on-quarter basis. Let's bring on board the management for Carborundum Universal. We have Mr. Ananthaseshan N, who is the Managing Director at the company, joining us this afternoon. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And if you could talk to us about the performance for the quarter gone by, and especially with regards to the subsidiary, particularly Russian arm that you have.
Sure. The last quarter has been a mixed quarter in terms of what happened in the macroeconomic environment. So we have seen economies around the world in terms of high inflation, geopolitical turmoil, causing energy prices to go up significantly. We saw the rising cost of capital, all of that. And what I believe has supported CUMI in terms of its growth is also it's a reflection of our business portfolio. So we've been able to be resilient because of the mixed and diverse nature of the portfolio, which balances, I would say, uncertainties with opportunities across industries and geographies. So the revenue growth, what we have seen is a 34% jump quarter on quarter to about 1,117 crores. And this is coming from across all major core product segments of abrasives, ceramics, and minerals. The subsidiaries, the standalone part of it has done again well, and the subsidiaries have contributed significantly to the revenue jump. You would remember that earlier this year we have acquired companies in the abrasive segment in Germany. So we have Rodius and Avuco in Germany, and also the Russian subsidiary also did pretty well. So specifically in terms of the Russian subsidiary, I must reiterate that the company or its products or any of its directors are not under any sanctions, and the business they are in, which is the manufacturing of and sales of silicon carbide, has been pretty strong. So the results coming in from VAW, which is the Volzhsky Abrasives works, on silicon carbide has been supporting in terms of the top line as well.
Right. Let me actually talk about raw material pricing then. What has the trajectory for that been in the quarter gone by? And if you could also touch upon what sort of a margin level are you seeing that will be sustainable going ahead? Do you think that you will be able to maintain a margin of around 14.5% going ahead, or do you see an upward revision or a downtick on that one?
First, on the margins, on the raw material front, what we saw in Q1 was a spike in raw material costs supported by or caused by the increase in commodity prices. But then in Q2, the commodities cooled off, and we saw a dip in the raw materials, which is, for us, it is the ceramic grains in bulk. So we saw a dip coming in. At the same time, we also saw a squeezing of the margins because of the stocks that we held at a higher cost. And that is the nature of this business. So we would see a cyclical nature of sourcing and selling. So that would kind of take care of the costs going forward in Q2 and Q3 and Q4. I would believe that the raw materials would kind of taper off in terms of the spike we saw, both caused by the commodities and also the lowering of the freight costs. On the margin front, we did improve our margins, and given the nature of the businesses, the three segments we are in, broadly, I'm positive that the margins will look up going forward.
That's quite an optimistic note that you're striking in when it comes to your margins. If you could talk about your capex for the quarter gone by, and also what sort of capex plans that you have for the entire fiscal year. And also, I wanted to add on to that, you did speak about the electro minerals and ceramic segments of your business. I just wanted to know what sort of growth guidance are you penciling in for these segments?
on the CapEx plan, we had planned to spend about 200 crores, around 200 crores for the year on a consolidated basis. We have spent till half of this year about 177 crores, and there will be a few spillovers, I would say, in H2. So I'm looking at between 200 and 220 crores on a consolidated basis for this year. On the electro minerals business and ceramics business, the ceramic business is what I would call a custom-built nature of the business. So we work with customers, and so that the margins and the growth would be a little more stronger. So I would reckon that we would maintain the same trajectory of growth in the ceramics business. In the electro minerals business, it's a raw materials business catering to refractories, abrasives, and ceramics. And here, again, depending on the demand situation, I would say it's a cautious between 12 to 15%.
Right, so thank you so much for taking out time for us. Heavy results day. Tech